you see on your screen, and I thought it important that we do some review of this. You had two problems similar to this one, and this is very similar to the one that you had Monday the 3rd, and I think we need a bit of review. This can be complicated, so I want to make sure that you understand this. So we're going to walk through this. The the problem here is similar, as I said, to the other problem that you had. I've changed the amounts of money a bit, but the problem itself is similar. A couple things before we get started with this. Remember, the two taxes we're talking about: unemployment tax, federal unemployment tax, state, FUTA, which stands for Federal Unemployment Tax Act, and SUTA, State Unemployment Tax Act, are paid by the employer, not by the employee. So if you are the accountant for this business, either you are responsible or your staff is responsible for doing this kind of calculation. So you need to know what it's all about. And it's done periodically. It's done 4 times a year, not at the end of the year, but 4 times, as we'll see. So we'll take a look at this, and please keep in mind it's important to understand the total earnings by each employee. You need to know their cumulative earnings. That's an important fact, but you also need to understand how much they're earning during a particular quarter, and we'll talk more about that in a few minutes. Also, it's important that you understand that these percentages we're using down here. If you look at this cell, for the federal unemployment tax, we're using 0.8%, which is a decimal equivalent of 0.008, and the state we're using is 5.7%. The decimal equivalent of that is 0.057. You should know that from your previous math classes, I hope. And understand that those change periodically, and from state to state, those amounts will change, particularly the state will change from state to state. And the 7,000 up here, we talk about the first 7,000 earned per year by employees. That amount of 7,000 will change as well. I think last year was more like 9,000. But to keep it simple and to keep it the same for each problem, we're going to use these percentages, and we'll use the 7,000. So as I go through this, be aware that you can stop it, you can pause it, you can rewind it, you can go back and listen to it again, and do that if you need to, because this is an important concept that I want you to be able to handle. So let's take a look at our employees. We've got 5 of them, same as in your problem previously. And in this one, I'm showing you the earnings for each quarter. For each employee, quarter 1, 2, 3, and 4. In the first quarter, we only had 3 employees. The other 2 were not hired yet. And the second quarter earnings are there, third quarter and fourth quarter. Understand that at the end of each quarter, we will have to do the kind of calculations this problem calls for. So at the end of the first quarter, we had employee A, for example, earn $1,100. We would have had to figure the federal and the state unemployment tax based on that amount of money. Until he gets or she gets to 7,000, we have to keep paying for the quarterly earnings. Now, what's important is to understand when we get through into the second quarter, then third quarter, then fourth quarter. Again, this employee A, earned 1,100. His total, or her total, for the 2 quarters is 2,200, which is still well below the 7,000. It's important to understand where that 7,000 hits. But when we calculate for the second quarter the taxes, unemployment, federal and state, we don't use the 2,200. We've already paid in the first quarter on 1,100. We will pay those percentages based on 1,100 again. That's what he or she earned in the second quarter. We pay each quarter based on the quarter earnings until that employee gets to 7,000. So we will see that happen with the first 2 for sure as we go through the year. But look at employee C. It's important to understand his or her taxes here. This employee earned 6,000 in the first quarter, so we paid unemployment tax for the full 6,000 earned. But in the second quarter, he or she earned another 6,000, so a total of 12,000. that puts this employee over that magic $7,000 amount. So we only pay on the first 7,000. We've already paid on 6,000. We're not going to pay on another 6,000. We're paying too much if we do. So we only pay up to 7,000, which means for the second quarter we would have paid for this employee C. We would have paid 1,000 based on $1,000 earnings. So we paid based on 6,000 in the first, based on 1,000 in the second quarter. Then he or she reached that magic $7,000. After that, all the other earnings in the second quarter, all the earnings in the third quarter, all the earnings in the fourth quarter, we don't have to worry about as far as unemployment tax because he or she is over the 7,000. Important. All right, let's see if we can go through this problem and figure out how to best handle this. So let's go to employee A, and the problem asks you to figure the fourth quarter federal and the fourth quarter state unemployment tax. So in order to do this, we have to look first of all at employee A. Has he or she gotten to 7,000? Well, no, we can see quickly that he or she has earned for the year $4,400. So we're not over 7,000, or he or she is not. So that means we have to pay. And we paid not on based on the 4,400 for the year, but we based on this 1,100. And calculation, if you know anything about Excel, hopefully you do, way up here in this line where I have the cursor, this is where we can put in a formula. So if I go 0.008 times $1,100, that comes to, the formula figured it for me, that comes to $8.80. Okay? I do the same thing over here. I'll create another formula. The decimal equivalent times, again, $1,100 equals $62.70. That's what we paid for this employee for the fourth quarter. Okay? Now, let's look at employee B. This is where it gets complicated. So, employee B earned $1,900 first quarter, so we paid tax on that. He or she earned $1,900 in the second quarter, so we paid tax on that because the total 3,800 is under their 7,000 threshold. Employee B earned another 1,900 third quarter. If we add up the total earnings for that employee for 3 quarters is 5,700. So we would have multiplied 1,900 times those percentages for the third quarter. Now take a look at total earnings for the 4 quarters. If we multiply those 4 quarters, 1,900 times 4, we see that this employee earned a total of $7,600 for the year. Now, that employee is over the threshold of $7,000. And this is where it becomes complicated. So we need to know that after 3 quarters, this employee, let's just put it right down here so we can see it. Sorry. Earned a total of $5,700. Now, we in the fourth quarter have to pay up to $7,000. So we don't have to pay based on this entire $1,900 because that takes us over $7,000. How much do you need to pay on in order to pay up to that $7,000? So we take our $7,000, subtract $5,700 from it, we get $1,300, right? Follow me? So we need to pay on the first $7,000. This 4 quarters adds up to $7,600. So we don't need to pay all of this $1,900. We need to pay the difference between $5,700 that we've already paid on. We've paid these 3 quarters. We've paid on this $5,700. We need to pay on the difference, which is $1,300. We don't need that right there. So that means And I can do this the same way we did before. Let's do it up here. So that means we will pay 0.008 times 1,300, which is $10.40. So once again, if you need to rewind and go over this again, do so, because that's important. So we're paying on $1,300 because that gets us to the $7,000 maximum. And the same thing happens over here, only this time we're talking about 0.057. Whoops, I'm sorry. 0.057 times, again, the $1,300. And that gets us to $74.10. Once again, up here is my formula that I created. It's 5.7% times 1,300, which is the amount that we need to get to the $7,000 amount. Okay? What did I do? Now, back to this guy, employee C. We know that way back in the second quarter, he was or she was over 7,000, so we don't have to worry about that at all. So we're not paying on that. We didn't pay in the third quarter. We don't pay in the fourth quarter, so that's easy. This employee was hired midway through, and by the third quarter, he or she earned only $1,300, and if you add up these three, this employee is only at $2,700. So once again, the same thing happens. We have to multiply 0.8% times the 900. That's how much he or she earned during the fourth quarter. So obviously nowhere near the 7,000. So we have to pay on the full quarter's earnings, not the yearly amount, but the quarter. So again, 0.08 times 900. This will be 0.057 times the 900, equaling $51.30. And now we're down to the last employee. If we look at this, third quarter we would have paid based on $1,000, and this employee earned $6,700 during the fourth quarter. Now that means if you add the two, obviously he's or she is at $7,700. Again, over the 7,000. So we don't have to pay based on more money than 7,000. We base it only on 7,000 total earnings. We've already paid on 1,000 back in the third quarter. So now we're going to pay on not 6,700, but we're going to pay on 6,000. Again, third quarter we paid on 1,000. Fourth quarter we pay on 6,000, which gets us the amount that we need. That's by law. We have to pay on the first 7,000. We don't have to worry about this extra 700. That's over 7,000. So 0.08, 0.8% times 6,000 is $48. And the last calculation, 5.7% times 6,000 is 342. That's how it's calculated. So you see that you need to keep track of the total earnings, but you need to pay only on the first 7,000, number one, and you're paying based on the quarter's earnings. If you pay anything at all for an employee, it's based on that quarter's earnings. In this problem, I think it's important that you pay attention to particularly employee B and employee E. Those two there are a bit more complicated. The easiest kind would be employee C, where we get all the way to the fourth quarter, we don't have to pay anything because he or she is well over the 7,000. So, as I said, review this, go back over it again. You'll see this on a test coming up pretty soon in the next few days, and you'll need to understand how this works.